Hey guys, hey, it is Ebony. I am still here in the office. And before I decided to leave, I wanted to go live and talk with you all about some things. Okay, some very important real estate things. All right, so let me move my phone and make sure I am paying attention because this is a very serious topic. It's becoming very popular, and a lot of agents are confused. I was confused at first as well. So, what we're going to do, we're going to be talking about subject to mortgages versus assumption mortgages and the difference. And if you have questions, just put them in the chat. I'll be sure to try to look over at the chat and answer all your questions. If I don't get to it, y'all know I do not leave comments unanswered. So if you have comments or questions, I will definitely get to it in some form or another if I don't see it during the live. All right. So what's happening is there are a lot of houses that are just sitting on the market. They've been on the market for a while, and that's because the market has shifted. It's not the same as it was in 2020, 2021, when we saw houses just flying off the shelves, right? There were like 50 offers on a home. That's not happening anymore. We have homes that are sitting on the market 60 days, 90 days, 120 days, 200 days. And if the sellers are able to wait it out, then perfect. That is great. We will do that. If they want other options, creative financing, then we have to do that as well. We have to provide them with all the options. The biggest one that I've been getting, since I do have a few homes that have been sitting on the market for a while, is the subject to mortgage. Okay. The subject to mortgage, what's happening is subject to means that the buyers are going to take over your mortgage payments. It sounds amazing, right? It sounds like, oh, yes, they're going to take over the mortgage payments. I'm good. I'm done. Not quite. Okay. The major difference between a subject to mortgage and a assumption mortgage is in subject to, you will definitely sign over the deed to your home. However, you are not signing over any financial obligations. That loan remains in your name. That loan is still your responsibility, whether they pay it or not. Okay, I'm going to run that by you again. The deed to your home will be transferred into the buyer's name. However, that loan is not being transferred over to the buyers, and that is in the subject to mortgage option. So if you get an offer like that, that is exactly what that means. The issue with that is, well, that I have with that is who's qualifying these buyers? Who said that these buyers are even financially able to pay your monthly mortgage payments? Who said it? Who qualified them? Who vetted them? What process have they gone through to prove that they qualify to purchase your home by taking over your mortgage payments? And essentially, just you're signing your home over, so it's not yours anymore according to the deed, but however, you're still financially responsible for that home with no type of no type of background check on the potential buyer's financials to even ensure that they qualify for this loan, right? So that's number one. That's the biggest issue, that I have with that. If I'm going to give you something, it's yours. The payments, the obligation, all of that is yours. Not just on paper is yours, but the loan obligation is still mine. Okay. Now, if you do happen to get buyers that are qualified, that make the payments on time and do all the great, because that is definitely going to help your credit, because that loan is still in your name and it's still going to be reporting to the credit bureaus whatever activity they take as far as paying back your mortgage, paying back your loan. Okay. The other thing is the other risk, the loan. There's a clause in your loan where if the bank finds out that you transferred ownership of that home, they can accelerate your mortgage loan, which means they can call the mortgage due. They can call the full amount due on your loan. So let's say if you owe $500,000 on your home at the time that you transferred this deed, the whole $500,000 is due once you have transferred ownership. Now, do these people, these new buyers, have the $500,000? How you would handle that, I absolutely don't know. Which brings me to my next point. If you are going to be doing a subject to mortgage, yes, I feel like I have limited knowledge. I don't feel like I have all the knowledge. I don't know everything about it, but I know enough to tell my clients what they are, what subject to mortgage is. And then the next step that we will be taking is contacting an attorney. So if you know an attorney, feel free, put them in the chat, him or her, put their information in the chat so that we can be contacted, because what's happening in real estate is we're getting a lot of subject to offers, and it's because the houses are sitting on the market for an extended period of time. This is a very different market than that we are seeing now versus what we saw in 2020, 2021, 2022. Okay, so my next advice would be to definitely consult a real estate attorney that is familiar with this process, that has done this process, because from my understanding, they have subject to packages. There's other things that you can do to protect yourself as a seller, to protect the buyers as well. And it could be a great thing if you have everything worked out. So for my sellers, I would be telling them what I know, which is what I just told you guys. And then I will be going to a real estate attorney, and they will make the decision that is best for them. And it's not my job, okay? It's not my job to make the decision for you. My job is to give you all of the information, okay? Give you my expert advice and opinion. However, it is your choice. It is your choice. I never push my choices onto my sellers or my buyers. I'm here to guide you. That is what we're here for. That's what we're going to do, and that's it. Okay? So long as you have the information, whatever decision you make, I'm gonna support you in that decision. I'm gonna ride with you till the wheels fall off, and that's what we doing. If we doing an assumption, that's what my client wanted to do, and that's what was best for them in that situation. Okay, so now I'm going to switch gears just a little bit and go over to, okay, well, what's the difference with an assumption? So when you assume the mortgage, is similar, and I'll tell you the similarities. The similarities are they do take over the mortgage payments. They do have the benefit of whatever interest rate you have. So if you had a 2% interest rate, the buyers are going to get that 2% interest rate. That is going to happen in both scenarios, right? So that's great. That's absolutely wonderful. The key difference in the assumption is they also assume the loan obligation. So what happens is the bank is aware up front of what's going on. The bank then sends the buyers through a qualification period. So similar to as if they were purchasing it with their own lender. However, this time they are going to be purchasing it through your bank just to take over your mortgage payments. So at the closing table, you will sign over the deed and you will sign over the loan obligation. So there is nothing in your name. You walk away with the deal being done at the closing table, you are completely done. Okay. The loan assumption does take a longer period of time because it's not a traditional, hey, I got pre qualified, I got pre approved, here's the lender, and we go through it. They have to vet them, they put them through their system, they make sure that they qualify, that they're able to take over the payments. Once that's done, then we can move forward to closing and everything like that. In this situation, you don't have to use a closing attorney, but hey, it's always good to have a closing attorney if that's what you choose, if you want them to look over it. A title company is more than qualified to handle both closings, actually, but because subject to is so new, that's why I would recommend an attorney look over it and make sure that you have an attorney representing you at closing. Okay, so back to assumption, because that's where we were. I'm sorry. Um, with assumption, so nothing, you're done, right? You're at the closing, you sign over the keys, and you signed over that loan obligation. So for the buyers, it's good too because they still get the same benefit. They get your low interest rate, and they just continue on as if it's their property and it's their loan, and you're done. You don't have to worry about credit issues. If they pay late, if they don't pay, you don't have to worry about any of that. Okay, so now I'm going to switch to, okay, wait, let me pause. Does anybody have any questions or any comments about that? Because I haven't looked, but I'm going to look. So just give me a second. Let me see. Okay. I don't see any right now, which means it's not there because this is my first time doing this on here. So, yeah, if there are questions and I missed it, I'm sorry. Your girl will get back to it. You know how I am. I'm definitely will get back to you. Okay. So, next, how does the seller get paid in either situation? From what I've seen, okay, what I've seen in my subject to offers, they're offering to pay the sellers the equity at closing, or some of the offers have had amounts on them that they're offering the sellers at closing as, their way out. For some, I've heard that some people who may have been facing foreclosure that they've taken this route because it frees them up from the loan obligation. It brings everything current. It helps their credit, and they don't mind doing that. And so that may be an option for them that they see, hey, I can't wait 120 days. I can't wait 90 days to sell my property. I need to do this now. So like I said, it may be beneficial in some situations. I'm just here to give you the information. So that is how you get paid on a subject to. If I am completely wrong, which I doubt that I am, because I usually do not give information without research, because y'all know that's just how I am. I have done some type of research before I have come to you today. So there may be other ways to get paid, but from what I have seen, there's a specific amount that's listed on the offer, or they may say we'll give them the equity out of the home, and that is how they get paid. And they also offer to pay the realtor fees as well on all of the assumptions that I've seen. So on the other side, on the subject to, see how y'all getting confused? Subject to, that is how you get paid on the subject to. They outline it in the offer, how much they're going to give the seller, or in what way they want to pay the seller. Subject to. Sorry. All right. Moving along to the assumption side. So I'm going to do a little bit of math here. So I hope I don't lose anybody. And we are real estate agents. So you know that 2 plus 2 is 4. Okay. So I should not lose you. If I lose you doing this, we need to have a conversation because I should not lose you with this next math situation. Okay. Here we go. With the assumption how your sellers will get paid. And I'm just going to use an amount here. I don't know how much your houses are worth. This is just an example, okay? So let's just say that your clients have a home that they are selling it for $500,000. However, they only owe $300,000 on that home. Okay, you with me? They're selling it for 500. They only owe $300,000. The buyers are going to assume the mortgage. They're going to assume the mortgage at $300,000 and whatever that interest rate is. Assuming they qualify, you get to the closing table. The sale price was $500,000. That's a difference of $200,000. The buyers need to bring the difference in the sale price and what's due on the mortgage loan to closing. It will be a part of their closing costs. It won't be their only closing costs, but it will be a part of it. And that is how your sellers get paid. I'm going to do it again, but I know my realtors got it because we got it, right? All right. They're selling the house for $500,000. They only owe $300,000. The difference, 5 minus 3 is 2, y'all. And then you add the zeros. Okay, just add the zeros. It's a $200,000 difference that the buyers must bring to closing. And that is how your sellers get paid, along with all the other closing costs. I'm not getting into closing costs today because that's not what this is about. All right. So the other thing, agents. If you are submitting an offer and it says that your buyers are going to be assuming the loan. Your buyers are going to be assuming the loan. Hold on, it's music playing and I can't have that. Hold on 1 second. All right. So I'm still at work, y'all. Working e-board. There's cars passing by. They getting ready for the weekend. I think it's wind down Wednesday. It's a lot going on right here. I just want to go home, to be honest. So when I get out of here, I'm going home. I'm going to just relax at home. So, okay, back to agents. If you have buyers that are going to do assumptions, you have to make sure that they have the cash to cover the difference at closing. Okay, there may be other ways that they can do that. Maybe they could take out another loan to cover the difference. That would be a whole nother situation. But at the end of the day, no matter how they get to that money, they need to either have the cash or some other form of payment to cover that difference. So before you take your buyers out there and you're like, oh yeah, you can assume this loan. If they don't have the money or they don't have a means to get the money with another loan or something like that, then your buyers are not qualified to assume the loan. I would hate for you to set them up that way. Yes, it's a great option because they can take advantage. Let's say someone's selling their home, they had a 2% interest rate on their loan or 4%, anything like that. Yes, of course. If they have the cash to pay the difference, by all means, see if that loan is assumable and then go for it. However, keyword what I just said, you have to see if the loan is assumable. The bank determines that. So you would have your seller contact the bank, see if the loan is assumable. If they say yes, then by all means, if you have qualified buyers that are trying to assume the loan, do it. Do it. It's not going to hurt, and it's everybody's going to leave happy. The sellers won't have the note in there. They won't be obligated to the note anymore. They've transferred the deed. The buyers have received a great interest rate, and we move on to see another day. All right. All right, y'all. So I'm going to recap. I'm going to recap. I'm going to recap. So if you have reached this part of the video, make sure you subscribe, make sure you like, make sure you comment, make sure you share. It's all free for you to do those things. And if you have reached this part of the video, thank you for hanging out with me. And I hope you're learning something. That is always my goal, to teach someone something. Or a takeaway. Or if you feel like you knew this and you feel like you want to give me information, let me know. I'm always open to learning as well, because I don't know everything and I don't mind learning. All right. So to recap, subject to mortgage, the key difference. The loan is not transferred out of the seller's name. The mortgage company can call the entire loan due once they find out that you have transferred this deed over. And that's the main difference. That's the main difference. In assumption, the deed is transferred and the loan is also transferred. So you have no more financial obligation. In any situation when you're dealing with something you don't feel comfortable, ask an attorney, ask your title representative. That's what they're there for. Ask us. That's what we're here for. We're here to get the information for you. I'm here. I work for you. I work for my buyers. I work for my sellers. They will tell you, I will never purposely put you in a bad situation. I will support you in whatever decision you make, because it is your life. It is your real estate goals. I'm merely here to be of service and be an assistant to you to help you get where you want to be. That's it. Because if you're happy, I'm happy. All right. So subject to mortgage is still fairly new, but I've received at least 6 subject to mortgage offers. And right now, my sellers are not in a position where they want to do that. So we've just passed on them, but I haven't passed on the opportunity to learn more about it and to educate them about it. And if it's something that they want to do in the future, we'll do it. And if not, then we just won't. We just gonna be on the market. So y'all come and listen, I got these houses for sale. They are beautiful. One is a corner lot with a pool in Riverview. The other one has been completely remodeled in Lutz. The other 2 have just gone on the contract, so we are happy for that. And as I discussed in my other video with Joanna, the other one hasn't passed the trimester, the real estate trimester. So I'm not going to talk too much about it and jinx it. However, I do have beautiful homes for sale, so hit me up. And if you want to buy a home, call me, hit me up too. I will help you. Either way it goes, vacant land, rentals, we got it all covered here. Listen, there's 2 other Ebonies on the team. There's Ebony IE. She handles the rentals. Okay. There's Ebony with a Y. She got the vacant land. So we got you covered all the way around. Just come see the Ebs at Allure. All right. So anyway, that's my plug for the business. Hey, you're on the live with me. So it's all good. It's all good. So if you have any questions, I'm gonna see if I can figure this out, because Yeah, there might be, and I miss it, and then I'll feel bad that I miss your questions. But yeah, subject to mortgage, there's a lot of offers on it right now. In assumption mortgage, they're very, very different in, in that aspect. All right. So I hope y'all learned something today. I had fun with y'all. Thank you for joining me. Come back again. We'll be doing it again sometime. I'll let y'all know how it's going. Put some comments in the chat to let me know what you would like for me to talk about real estate unfiltered. So it's unfiltered, it's my honest opinion. Y'all, you know how I am. If you don't know how I am, you're gonna get to know how I am. I'm gonna always keep it real, try to keep it fun, and get you to learn something in the meantime and in between time. All right. So I'm actually still here in Ebor. So if you're close by, you want to come into the office, come on by. I don't know how much longer I'm gonna be here though. I don't know how much longer I'll be here. That traffic is building up, but just come on by, and I'll be here to help you. All right. So I'm gonna try to end this live. So don't laugh at me. Don't judge me too bad because it's my first time doing it on here. So I might be like fumbling around, with the stuff in the live. But don't forget to subscribe. Don't forget to like. Don't forget to comment. Don't forget to share. It's free. It's free. All right. So let's see if I can end this properly. Oh, I sound bad. All right, y'all. Subject to versus assumption. What's the difference? Put it in the chat. Put it in the comments. Tell me that you know the difference. Please tell me that you did not listen to this entire thing and didn't learn the difference. I know you learned the difference. You had to because I told you. I told you. All right, y'all. See y'all next time.